Good morning, everybody, or good afternoon, depending on where you are in the world. My name is Stephen Wall, co-founder and head of marketplace and content at the Wealth Mosaic. This is the second edition of our WealthTech Talk interview series, and today I'm joined by Ronen Kertis, CEO of Israeli-based regulatory reporting provider Cappitech. Good morning, Ronen, and thank you for joining us today.
Good morning, Stephen. Pleasure.
Good. Well, so we will have a discussion with Ronen today for 30 minutes or more, talking about the business, their solution set, what they do in the wealth management sector, and all sorts of trends with regard to regulation, regulatory reporting, so on and so forth. So some thinking from Ronen in terms of where the market is, where there might be weaknesses, challenges, opportunities of things to improve. First of all, Ronen, before we get into the questions on Cappitech, can you give us a brief introduction to yourself, your role and your background?
Sure. My background is technical in nature. That's my education. I've been in the industry of the financial business and building technology for financial institutions for over 20 years now. A lot of my career was part of a broker firm called ITG. I was their CTO, lived in London for 4 years, and ran their R&D center out of Israel for more than 10 years. 7 years ago, as a spin-off from the ITG Israeli office, I founded Cappitech. And since then, we've been in the business of providing reg reporting and compliance solutions for financial institutions, be it the buy side and the sell side.
Perfect. Can you tell us a little bit more about the background to the firm? So, why you started it, what you saw as the opportunity or the market theme at the time that gave you that drive, that impetus to found the business?
Sure, yeah. So Cappitech, as a company, we are a RegTech company, and we provide reg reporting services as well as best execution, reconciliation, and other compliance services. When we started the company 7 years ago, this was after the financial crisis, and regulators across the globe have tightened their reg reporting requirements. Just after we started, EMIR started in Europe, and we happened to get quite a few requirements from firms to help them comply with EMIR. It's been much more complex than the previous reg reporting, the MiFID I type of reporting that was about 10, 12 fields per transaction. With EMIR, you had close to 100 fields per transaction that you need to report, and firms found it quite difficult to do that. So we found ourselves doing it quite a bit, and with time we realized that the demand in the market is only growing, and that would be a good opportunity for us to build a proper platform to service the reg reporting space, and not just EMIR, but across the board. So we started with EMIR, but we then added on more regulations in Europe, such as MiFID I and then MiFID II when it was introduced early 2018, but also expanded our coverage globally as our clients asked us to do that. And we currently cover Asia, Australia, North America, and Europe, obviously.
What can you tell us about the team? So in terms of how many founders, how large you are now, and the kind of capabilities that you have within the firm, whether they be technical or regulatory or IT?
So we're now in the firm, we are 40 people. We are very much focused on technology. That's our origins, that's our roots, and we try to do everything in a very technological fashion, meaning make it efficient, correct, and simple to the end user. So 40 people, more than half of the firm is R&D. Most of the team is in Israel, but we have presence in London, sales and service, professional services presence in London. We have a team in Dublin and team in Cyprus that also are servicing our clients. So European focused in terms of presence, and as I said, most of us are technologists.
Obviously, our interest is wealth management, and we'll come on to that in more detail shortly. In terms of your client base, more broadly, what kind of firms is it that you work with?
So more broadly, it's sell side and buy side. On the sell side, we service banks and brokers. On the buy side, these are asset managers, hedge funds. We do have some corporates who fall under regulations such as EMIR, for their OTC derivative trades, hedging trades, and we service few of them. But the vast majority is, proper traditional asset managers and brokers.
Perfect. And you mentioned obviously starting with EMIR and then moving into MiFID and other regulations and maybe broadening out perhaps the client base as well as the geography of those clients. Are there particular milestones that you would talk to that have been significant in your own development as a firm, either sort of technological developments or client types or maybe the regulations that you've supported?
Yeah, so it's an interesting question. So we've seen growth in our business along the time and steadily growth all the time. We've been growing, doubling the size of the business year over year for the last 5 years in a row. We do see, other than the steady growth, cases where we see sort of like a step function growth, and those come around market events such as introduction of new regulations that we support. So, a typical one was MiFID II introduced in January 2018. So our business grew quite a bit around that event because to many of our previous clients, we offered MiFID II reporting, and also we onboarded quite a few new clients on the back of that regulation. SFTR is another example of new regulation joining in the market. So these are sort of market events that causes our business to grow in a non-linear fashion. The other thing is where we introduce new products. So we, other than reporting, we offer additional products around reporting and around compliance, one of which is reconciliation, where we do 3-leg reconciliations. We reconcile the client's EMS, OMS trade data versus the data that we send the regulator versus the data that comes back from the regulator. In the FCA, for instance, it's the MDP file. For those of you who do reconciliation with FCA, you would know that. So introducing new products such as reconciliation or best execution, where we provide systematically monitoring trade by trade. So whenever we introduce those new products to the market, we also see a spike in our growth because new clients are interested in that, and also existing clients who benefit from no additional integration and additional services. So, we see growth on the back of those as well.
Perfect. Thank you, Ronen. You've talked about the products, and obviously this is a technology. Ultimately, it's a platform to support the needs of the market. So can you tell, that can mean many different things. So can you tell us what the Cappitech platform is, what it does, how it maybe breaks down by modules or individual service and product areas?
Sure. So it's a central platform. It's a cloud-based platform. We host on Amazon, AWS, in Dublin and in London. So we have both a Brexit-ready environment as well as BCP environment. And, in these days, both Brexit and BCP environments are very, important and interesting solutions. So that's sort of the setup. If you think about it, we sit between the clients and the regulators, or more specifically, the endpoints that the client need to report to, which are the trade repositories and the arms. These are the licensed endpoints that firms need to report to. And we take the client data, and we can either have the client send us the data via file, or we can connect to their trading system, EMS or OMS, and pull the data from there. And we have a mix of clients where we connect to their trading system or send it to us. Once we get the data from the client, our system is able to build a rule engine on top of the data, so we can actually take the data and manipulate it and change it to the client business logic. So a perfect example of that are firms that are able to provide us with block level data in one file and the allocation data in another file. Trade reporting, transaction reporting is done on the allocation level, but sometimes those firms will not have, say, the average price in their allocation file and only in the block level file. So we are able to take those two files, stitch them together, pull some information from the block level data, pull some information from the allocation level data, and create a transaction per each and every one of the execution. We then take that transaction and pass it through our eligibility engine, which basically checks whether that transaction is eligible for reporting or not. And we use a variety of data sources for that. One example is the FIRDS database that is published by ESMA, by the European regulator, that determines which ISIN is eligible to reporting or not. Once we determine that that transaction is eligible for reporting, we pass it through our validation engine, and our validation engine covers the hundreds of validations that ESMA, the regulator, prescribes. And on top of it, there are many other validations that we added with time, sort of as our experience with clients and their audits, internal audits or audits with regulator. And when we see those issues and failings, we code them back into our validation engine to ensure that future reporting don't have those failings. So with time, our validation engine has grown and is now covering not just the out of the box regulatory requirements, but many additional validations that are the knowledge accumulated throughout the more than 100 firms that we are servicing for reg reporting.
No, continue. So I was going to
we have. I'll just finish it up. After we run the validation, we're able to enrich the data with external data sources, such as price feed that we take from market data vendors such as Reuters, and we then report it to the endpoints, as I said earlier, and we offer our clients a single point dashboard where they can see all their trades within that one dashboard across all regulations. So if you think about it, if you report EMIR, MiFID in Europe, ASIC in Australia, Canadian reporting, you have one single point where you can see and monitor your reporting across the globe.
So that would be, I suppose, a differentiating point compared to maybe some of the competitors. Are there other factors that you would highlight as things that differentiate you from other providers or other options in the marketplace?
Yes, I think first is one big differentiating factor is our technology. We offer latest and greatest technology, and that means a very short onboarding cycle, a much more robust platform that can handle millions of transactions every day. We process about 5% of the entire EU volume on a daily basis through our platform for our clients. Other than reg reporting, on the product suite, we offer reconciliation and best execution that are integrated in the platform. So you don't need to provide us with additional data or go to a different vendor or different system. It's all within the same platform. So it's quite uncommon for one vendor to cover not just reg reporting, but those additional compliance requirements. And I think the third differentiating factor is our commercial model. So we provide the technology and the platform and the managed service, so access to our professional services. What we don't do is we do not tell you which endpoint you need to use. So if you prefer to use one endpoint over the other, so if you prefer to use DTCC or Univista or Trax or Euronext as an endpoint or any one of the others that are out there, we can get you there and we can report you to those ones. We are in a unique position where we can actually recommend which endpoints process and service better the different regulation, and also from a cost perspective, because those endpoints cost reporting, we can also provide our clients with information where they would have the best pricing option for their particular business and particular volumes.
Perfect. In terms of use cases, so I'm a wealth manager, I'm another type of financial services firm. Why am I coming to you? What are the factors that you feel firms come to you for and that you can support them with?
So I think it's a multiple things. Some we touched already. We are able to help you with your existing environment. So we are happy to take any file in any shape or format, and we are already integrated to more than 20 different trading systems, EMS and OMSs. So integration with Cappitech is fairly easy. So that's the first thing. The second thing, you'll get a white glove service with our professional services team. So it's not that we give you, here's a spec, go and figure out how you send to our spec. No, we will walk you through that. We will help you to integrate, and the same people that would onboard you will support you throughout the process.
Yep.
The third thing is the ability to select whatever endpoint you want to use, and you can continue to use the same endpoint that you've been using up until now, but we will just provide you a single point of service across all your jurisdictions.
Perfect. You've also mentioned, obviously, working with Amazon in terms of the cloud, working with Reuters in terms of data, and collaborating with, or connecting rather, to various OMS, EMS systems. Are there any other collaborations that you have in the market that are important for clients to be aware of?
Well, we are collaborating with all the trade repositories and the arms in the market. So those are the likes of the TCC and Trax and Univista and the CME and Euronext and all the main endpoints that you can report to. These are our partners. We work with them, integrate with them, and can get your report to them. EMSs and OMSs, I don't want to mention one and miss the others, but really large variety of EMSs and OMSs that we are integrated with and connected to. They're all on our website, so connected to them. And I think the other integration and partnership that we have in the market is with IHS Markit. They are a large vendor in that market. And with them, we are providing them with the technology and the platform for SFTR reporting. So SFTR reporting is the latest and greatest regulation that comes into play starting mid-July, so in a month's time. And market is servicing 90+% of the sell side, 80+% of the buy side in the market. All the large players in the market, 19 out of the 20 largest borrowers in the market are on their platform, and Cappitech is basically the technology behind that offering. So that's a very important and significant collaboration that we have in the market as well.
Okay, just one final question, if I may, on the solution before we start talking about market trends. You've IHS Markit new solution coming in. Is there anything else in terms of development that you would like to make the market aware of, whether it be sort of application of AI or all of those fancy terms, or anything more practical?
Yeah, I mean, we employ technologies for big data, etc. We don't. We try not to talk about the technology. We try to talk about what does it give to the client, right? The technology is only means to an end, and we try to talk about the end. So we do employ all those serverless technology, big data technology, etc. That's a very fancy conversation for technologists. I'm not sure it's the audience here, and I'm not sure. We try to shy away from focusing on that. We want to talk about what do we give our clients. So other than the services that I touched upon, one other key service that we offer our clients is, and that is something that we've seen when we talk to our clients, we see them say to us that they invest a lot of effort, money, tears, blood, sweat in being able to report correctly. And they say, what do I get in return? I mean, okay, I tick the box and I'm compliant. What can I get in return? And part of our vision and mission is to provide value to the compliant companies in return for being compliant. And this is where our insights products and offering come into play. So we are able to provide firms insights onto their business and also compare their business to their peers that are using our services, obviously all in an anonymized fashion. But that insight allows them to better understand their business, where they sit in the market, are they doing well or not. So to give you an example, just not to keep it in a slogan fashion, in the last 2-3 months with COVID, we've seen a huge growth in volumes in the market. And, for our sell-side clients, we have clients that double their business. So they would come to us and say, we're seeing our business soaring and doing really well, and we've doubled our business in equities. And we would be able to tell them, yes, you did. But when we compare you to your peers, actually they almost tripled their business. So their business in equity grew 270%. So while you've been growing very nicely, you actually are behind the industry. So that is something that is quite difficult for a company to understand, certainly not in near real time. And with us, they get a visibility to that. So they obviously won't be able to know that this firm grew that and that firm grew that much, but they will be able to compare themselves to their peers. For instance, if you're a retail broker, compare yourself to the retail brokers in our platform and see how well you're doing versus those ones.
Perfect. No, and that business intelligence is interesting and kind of leads me on nicely to the next question, which is sort of regulatory trends in the market. But I also wanted to ask about the impact of COVID. In fact, it was my last question, but I'll come to it now.
Okay.
From a regulatory reporting, from a trading perspective, you've mentioned their growth. Have there been other impacts from COVID that you've witnessed in the market that we should be aware of?
I think, there were a few things. First, the regulator is a bit on firms. So I touched upon SFTR regulation that was meant to start in April, that was pushed to July because the regulator acknowledged the fact that it will be very difficult to launch a whole new, very complex regulation during that period. So they gave firms a 3 months break, if you will, to get that done and dusted. By the way, we don't expect them to continue and further delay that regulation. On the other hand, working from home, being remote, is a source for few things that the regulator is really watching well, and that is things like market abuse, AML, those things, surveillance, and we know that they are actually more focused in this environment on those things than they were in the past. Mm-hmm. So the fact that people are working from home, not close to their peers in the firm, and everybody is remote, at least in the regulator mind, is a potential for, hey, I may do something that otherwise I wouldn't do. Yeah. And so we do know that they look at that very closely. The other thing is firms looking at BCP and the ability to operate remotely, obviously. And we as a vendor in the space, we saw more interest in our services because firms, certainly the smaller one, found themselves with 1 or 2 people that really specialized in the space where we're in, and the concern that those guys would either be very busy with other things or for some reason won't be able to to attend to that type of work, be it not being able to access remotely, etc. And because this is a mission critical to their business, they have to have a solution. So they actually realize that this is something they would prefer to outsource to someone who has, quite a few people handling it. That's the only thing that they are doing. And from a staff perspective, as well as from a technology perspective, they are well prepared for such an environment.
But there's been no sort of dramatic reaction to COVID. I mean, it's kind of business as usual, but there are certain things that the regulators and others are keeping their eyes on.
not dramatic from a market perspective. I mean, big ones, as I said, some of the main regulation have been postponed. So that's, I don't know if it's dramatic, but it certainly impacted many firms. We do see, sort of dramatic situations behind the scenes, but these are not market-wide situations. These are company-specific situations where, for instance, they were unable to report for, good few weeks because they had some internal issues, working from home or staff missing, etc. But not systematic across the market, I would say.
Okay. So if we look just more specifically now at wealth management and regulatory trends and the status of the market, I know that wealth isn't your only segment, it's a part of the business that you would service. Can you tell us a little bit about what regulatory trends from reporting and otherwise you see in the wealth management space? What is going on?
So I think, with I'll focus on Europe now and talk about the US a bit later. So with EMIR and MiFID being in place for a good few weeks, we see that area stabilizing, and we see the regulator moving from do you report, the sheer question, are you reporting, to are you reporting well? Certainly with MiFID. So there will be much more into the details. Are you reporting well? Are you reporting on time? Is your reporting complete? Meaning, do you report everything?
We're back.
Yeah, we're back. Okay.
Right.
Yeah, sorry for that. So do you report in complete fashion? Do you report everything, not over and not under reporting? So that would be something that they will watch well.
Yep.
They've given firms enough time to find their issues. They, in some cases, talk to firms specifically or put out market circulars with these are the main things we're seeing in the market and allowed firms time to fix those. And they're now coming back with more specific questions to firms. So I think we will, just as we've seen with prior regulation, we will see more scrutiny and potentially even fines coming in the next 12, 18 months from the regulators. To give a couple of examples of where the FCA and other regulators are homing on, these will be cases of do reconciliation. So the FCA, for instance, they are very progressed in their thinking and in their services, and they provide firms access to their portal and the ability to download a file of what they see you, the firm, member firm, reported to them. So this is my view as a regulator of what you reported to me. And their expectation is that firms, from time to time, in a systematic fashion, would download that file and compare it to what they reported and make sure that what the regulators see match what they think they reported. And it's very easy for the FCA, for instance, to see firms that are not even downloading that file. So if they're not downloading that file, by definition, they are not reconciling. Yep. And we know that the FCA wrote to the market, to firms, to say, we don't see you downloading it, and we expect you to run reconciliation. So that's one example. We ran, this is a bit old, it's a 6-month-old survey, but we ran 6 months ago a survey, and about half of the firms, the FCA firms, weren't even registered to that portal. So by definition, half of the firm, at least 6 months ago, were not doing reconciliation the way the regulator was looking them to do that. Yep. So that's one thing. Best execution is another thing. The FCA is looking, and other regulators, they are looking at the prices of the executions that firms are reporting and looking to ensure that those prices are within the the market prices that were available at the time. So for instance, the high and the low in the day of the day. And if they were outside, they will write to those firms and say, how come you report you traded Vodafone at that price where the high and the low of the day was outside? So quite a few of those events, so more tight regulatory governance in Europe.
Yep.
In the US, there is a refit for the Dodd-Frank. So the US had hardly any changes in the last decade, but there is a significant change coming up in 2021, similar to the MiFID I to MiFID II change that we've seen in Europe. So we do see this upcoming, and certainly firms that are engaged with Dodd-Frank CFTC reporting would have to start analyze the impact on them, whether it has any impact, and if so, how do they adhere to those new changes.
So you mentioned obviously that the FCA and maybe other regulators in Europe are looking at quality. So firms have had a couple of years now to get used to MiFID and get used to the requirements, and now they're going to be more stringent about exercising their powers. Some firms are obviously not engaged and not doing what is expected, so there are going to be fines, you suggest. What can firms do? I mean, are there practical steps that firms can take to make sure that they remain compliant and that they don't run into challenges with the regulator?
I'll talk about our little space. Compliance is a very wide space, so I'll talk about the space that we operate. I think first, stay abreast to the changes in the market. Subscribe to various data sources. Subscribe to companies that are involved in that space. You guys, obviously, with your portal and your publications, you write from time to time about those changes, and you've got a great asset portal. Firms like Cappitech, we run quarterly compliance officers event. In normal days, we do it in London and in other capital cities in Europe. Now it's virtual, so to some extent, it actually makes it easier to attend those ones. We bring in our own experts, third-party experts, lawyers, compliance officers, regulators that are talking about those changes, and we do regular webinars and put out regular assets. So that's one way. Keep the pulse on, the finger on the pulse with what happens in the market. The other way is use external, compliance companies, vendors that can come in and look at your flow, look at your business, and let you know whether you are compliant, whether you do the right thing. Are you reporting where you should, and are you reporting properly? Again, it's not our business, but we are very much in that environment, and if people want to contact us offline, we're happy to recommend a few firms that we know have been doing a great job in that space.
Are there, obviously staying abreast of the requirements is one thing, and in terms of I stay abreast of the requirements, but I still make a mistake in the reporting, are there certain areas where they can easily run into challenges and they just don't know it yet?
For sure. I mean, we service small firms and we service very large tier 1 firms. And even with those very large tier 1 firms where you meet a compliance team of 20, 30 people, experts, and, a team of, let's say, 5 people who are, all they do in life is reg reporting, they would still only, be aware of what they've seen, what they read, and what their auditors told them. And if you come to a company like Cappitech, where we service more than 100 firms and we are engaged all the time in the market, we would know what regulators found and saw at other places well before they even found it with you, because they haven't seen it or they haven't audited you in the last 6 months or so. So talking to people like us and using vendors who've got sort of the wisdom of the crowd, if you will, where we see so many things and where we learn with time across the industry. I think that's a great way to use us. And, if I think about it, the larger the firm is, usually this is one of the main reasons why they want to use us. They would have the budget and the ability to build the technology themselves, to do it themselves. That's not, what we can give them. They can do it themselves. They have army of stuff. What they don't have is access to what the market see and hundreds of different audits that different regulators are doing across the globe.
Yeah. Recent market events, earlier you mentioned CME having closed their regulatory reporting business. Can you tell us sort of your perspective on that?
Yeah, so that's if you asked about dramatic changes, that's a fairly dramatic change, certainly to firms who were using the CME. So what is CME and reg reporting? So CME has been a global player, a significant global player in reg reporting. They had trade repositories all over the globe, full global coverage, Americas, Asia, Europe, all over the globe. And they also had armed services in Europe. They are still are servicing about 1,000 different financial institutions around the globe. So a significant amount of clients. And they've announced about 3 weeks ago that they are exiting this business and closing most of their arms and trade repositories. So that's a big impact for their client base. If you think about it, all their clients that were reporting to them now need to find a new home, contract a new vendor or a new trade repository. In some cases, it's multiple because they would have multiple jurisdictions that they are using CME for, and code their technology to report to the new endpoint. So it's a quite significant undertaking. The announcement is that CME are leaving that business at the end of November. So, it's a 6 months period, and especially in these days with COVID and Brexit and everything else that happened, it's something that many firms, every firm was not planning to and weren't expecting. So budget, project, resources is a big challenge for the industry. It's early days. We see firms scrambling and looking to find solutions. We in Cappitech sit there in the middle. We were using CME as partners. We were reporting to them. The good news for our clients is if they were using CME, we will flip them over to another trade repository. We will do it for them in a transparent fashion. So they don't need to change anything. And that's, one of the advantages of using someone like Cappitech that sit in between the firm and the endpoint and can switch you almost overnight to another endpoint. So that's one. And the other thing is we talk to a lot of their clients who are looking for a solution. And we, as I said earlier, we have a variety of plugins and connections to different vendors. Our plugins also cover the CME and the Nexabide, which is a subsidiary of the CME that was doing reg reporting. So we cover their formats. So any of their existing clients who is looking to find a new home, if they were to come to Cappitech, all they need to do is just change the IP address that they are sending the files to. We can consume those files and report them to a new arm and a new trade repository. So we hope we help the industry there with a smooth transition on the back of that event.
Great, Ronen, thank you. A final question. So we've covered a lot in terms of the evolution of Cappitech, your solution offering, some of the regulatory trends in the market, CME, Brexit, COVID, all of these things that are shaping the world around us. If you look forward a little bit, are there any sort of trend statements, any things that you think is going to be happening over the course of the next few years that are relevant for the work you do and the clients that you service?
I think if I look at the client that we service and the industry in general, and I don't think I'm going to surprise you, I think technology, digitization of the world will be more and more, right? Firms will get used to work remotely, will get used to service their clients remotely. I think to a lot of firms, certainly to the small and medium ones, it's good news We see it in Cappitech. This event almost ironed the world for us. You talk to someone who is in the US or is in Asia, and we are there just as their vendor who sits 5 miles from them. We are all there available for them all the time. Asset managers are selling their products and services. It's no longer about am I sitting next to you in Frankfurt or in London or in Paris. It's more about the service and the tools that I'm giving you, the clients, as opposed to the geographical proximity. So I think that's going to be a big play. Not to say that being local is not important, but certainly more technology, more digital services will be a big factor in the years to come. Operational efficiency, reducing process inefficiencies in the process and fats in the process of ticking boxes is going to be a big thing. So I'm a big buyer and a long investor on technology and digital solutions in the financial industry and in other places.
Perfect. Well, a final question on that? As you mentioned, the digitalization of the industry and the increasing application and usage of technology. If you were to say from 0 to 100, 0 being start and 100 being the end point, whatever that is, where is the industry on that journey? Is it far into it? Is it really at the taking basis right at the start? Does it still have a lot to learn? What's your kind of view?
First, I think the end today is not the end in few years' time. So the spectrum of 1 to 100 today, the 100 today is the 50 in 3 years' time. So it is always evolving and always changing. If I would take the 1 to 100 today, I think the industry is probably halfway through. We still meet a lot of firms, at least in our space, that do a lot of their work manually, spend a lot of effort to do it manually, and put aside the effort involved in doing things manually. It's prone to error. It's prone to events such as COVID and other things. And I think the industry has, even with the current tools that the industry can offer, the adoption is I wouldn't say way behind, but still has got way to go. The industry is a bit conservative for good reasons, but probably a bit too conservative. And I actually think that things like COVID will be a great catalyst to move things forward. Such an event as we do now, typically we would sit next to each other, right, in a physical manner. Now it's very natural that we talk remotely. So I think the world and digitization would fast track on the back of COVID.
Perfect. Well, Ronen, thank you. I think we said we'd talk for 45 minutes. We probably have done that. So thank you for the time and that introduction to Cappitech and your business and some of the trends in the market. I'll give you opportunity to finish off with one. Is there one final thing you'd like to tell us about Cappitech and what you're doing in the market that we haven't covered?
I think we covered it all. I'll take the opportunity to thank you, Stephen, and the audience for listening in, and wish us all health, and hopefully we can meet back again face to face. With all the technology that I'm pitching to, there is no replacement to personal contact and face-to-face meeting. So wishing us all health and meeting soon face to face.
Great. Well, again, Ronen, thank you for that. That was much appreciated, very interesting, and we will speak again soon for sure. For those listening, this presentation, this discussion will be available in recorded format very shortly after this live session. If you have any questions, please send them through. Thank you for listening. Thank you to Ronen for speaking to us, and thank you for his colleagues at Cappitech for helping organize. And we will speak to you or be presenting to you again very soon. Thank you, Ronen. Thank you all, and goodbye.
Bye-bye.
Bye. Bye.